The Oracle of Omaha, Warren Buffett, the head of Berkshire Hathaway, had not taken part in an IPO offering for more than 50 years. That is until one company was so unique that it defied convention. That business is Snowflake, a cloud-based data warehousing provider. As a result, Snowflake's IPO was the biggest software IPO in US history. But what is Snowflake's history? And how did it come to be such a well-known company? And why you should buy Snowflake stocks? What's good, you guys? This is Market Thrive. And today, we're going to talk about the company Snowflake and why buying their stocks is a good investment. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. What is Snowflake, first of all? Established in 2012, Snowflake is a California-based cloud-based data warehousing firm. Customers can concentrate on extracting value from their data rather than maintaining the infrastructure in which it is kept because of Snowflake's software as a service concept which needs no upkeep. Some companies offer what they refer to as data warehouse as a service, which stores user data and enable analysis utilizing cloud infrastructure, obviating the requirement for an on-premise storage facility and providing far more insights and analytics for the data. The cloud platforms used for it are Google Cloud Platform, Microsoft Azure, and Amazon S3. Three professionals, Benoit Dashville, Thierry Cron, and Marcin Zakowski, came up with the idea for Snowflake, which was founded in 2012. Due to the three members' shared passion for snow sports and Sutter Hill endeavors, they came up with the moniker Snowflake. Data warehouses, in their opinion, are rigid, pricey, and challenging to utilize. This is very often the case today. As a result, they made the decision to run the warehouse in the cloud and revolutionize the sector. They understood that in order to grasp the elasticity of the cloud, it would need to take into account speed, usability, and cost-effectiveness. Prior to selecting former Microsoft executive Bob Maglia as CEO and going public, they worked covertly for their first 2 years. As of 2020, they have around 3,500 active customers, including Capital One, Adobe, DoorDash, and Instacart, up from about 80 when their offering first became available in June 2015. In the 5 years that Maglia served as CEO, their accelerated growth and attracted capital rounds worth hundreds of millions of dollars. Moreover, Snowflake transformed the way prices are calculated. Instead of using a subscription model, which has the advantage of securing revenue but requires customers to pay for services they never use, Snowflake opted for a utilization model, which focuses on a client's consumption based on whether they are computing or storing data, dividing the pricing and resulting in more flexibility. So as needed, the tap can be turned on and off. Snowflake hired a new CEO in 2019 to take Maglia's post. After leading the data domain and service to its current IPO, Frank Slootman, who is known for making organizations appealing to investors, stepped out of retirement to join Snowflake. He managed to quadruple Snowflake's customer base from 1,500 to 3,000 in just a year, greatly increasing income but also increasing losses, which are relatively typical for a high-growth software company. He did this by bringing in crucial contacts in high-profile roles. Slootman hired teams with expertise in attracting high-end customers and expanded the size of sales staff. There were too many cooks in the kitchen, so he promoted a co-founder Dashville to Chief Product Officer and fired 4 other individuals who had oversight. Along with excellent client retention rates, they also raised the number of customers spending 7 figures with the company. Due to this success, the company filed for an initial public offering in September 2020 at a price of $120 per share. On the first day of trading, the share price doubled, giving the company a valuation of $70 billion, the highest ever for a US software company. This is the rationale behind Warren Buffett's involvement, who invested $500 million alongside Salesforce and numerous other venture capitalists. There is no doubting the size of the market that Snowflake serves. According to the multinational data company, global data storage earned $88 billion in sales in 2018 and might quadruple by 2023. Okay, so that's enough history about the company. Now, let's talk about the reason why you should buy their stocks despite their dropping in May. Interest rates have skyrocketed upward in 2022, which has resulted in a dramatic value reset for high multiple growth stocks. Snowflake, regrettably, is not immune to these market pressures. Snowflake is currently much more appealing than it was when it was trading in the $180 range. I can confidently state that the business hasn't changed dramatically in the past few months after carefully examining Snowflake's quarterly financial results and forward guidance, such as the investment thesis remains unchanged. In after-hours trading on August 24, following the publication of the company's second quarter report, Snowflake's shares increased by 18%. The sales of the company that provides cloud-based data warehousing increased 83% year-over-year to $497.2 million, above analysts' expectations by $29.9 million. Its net loss did, however, increase from $189.7 million to $222.8 million, or 70 cents per share, although it fell short by 12 cents of the consensus estimate. Although Snowflake's strong revenue growth masked its disappointing profitability, is it still a wise investment in this challenging environment for tech stocks? Here are 3 justifications for buying Snowflake. Snowflake is appealing since it is expanding like a weed, has strong retention rates, and has a lot of unmet need. Its product revenue, which makes up the majority of its top line and rose 106% in 2022, which ended in January, is now the most it has ever been. It anticipates another increase in product revenue for the fiscal year 2023 by forecasting that its product revenue would reach $10 billion by the end of the current fiscal year 2029. Snowflake is assuming that it can expand at a 36% compound annual growth rate over the following 7 years. The company wants to increase the number of high-value clients in order to accomplish this aim. 6,808 clients were the company's total at the conclusion of the second quarter. Within that total, the number of clients that contributed more than $1 million in product revenue during the previous 12 months rose to 246. By the end of the fiscal year 2029, it anticipates that the high-value cohort will grow to roughly 1,400 clients. The long-term objectives of Snowflake appear ambitious, yet they are supported by the ecosystem's stickiness. As of the conclusion of the second quarter, the net revenue retention rate was 171% a year earlier. The amount of revenue it still owes on its outstanding contracts or its remaining performance obligations increased 78% year-over-year to $2.7 billion. Snowflake must maintain its position of dominance over its competitors in order to expand. The problem, however, is that despite having a first-mover advantage, industry leaders like Amazon, Google, and Microsoft are already taking action to challenge Snowflake, which depends on Amazon's AWS, Microsoft Azure, and Google's cloud platform for data storage, and thus serves as both a client and a rival. As corporations operate multi-cloud products, neutrality can be perceived as a benefit. Nevertheless, there are low entrance requirements for these massive companies, which could lead them to eat into Snowflake's market share. Despite this, it is impossible to ignore Snowflake's incredible development and efforts to challenge conventional wisdom around price and data, demonstrating their willingness to go against the grain. So, thinking of buying Snowflake stocks? Feel free to jot down your thoughts in the comment section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive signing off.